Hey guys, Jim here, 9:10 a.m. on June 22nd. So we're lifting up into this predicted zone of strength. So, tracking here. If this is really bullish, this will be sort of a left shoulder, head, right shoulder, really sloppy. You wouldn't see this in the technical analysis textbook, but I know a lot of you are into technical analysis, and even if you just have a basic understanding, you're familiar with a head and shoulders bottom, a head and shoulders top. So head and shoulders bottoms are usually called inverse head and shoulders. And if somebody refers to just a head and shoulders pattern, they're usually talking about a topping pattern. So anyway, you can see we're moving up. Now we've made contact at this 5430 vibration. So, it looks like the zone of strength that I guessed at is going to be at least a conservative target. So we've got another, 20 minutes until we're into the bullseye of this zone of strength. So, really that would be the bullseye right there. So, I guess it's possible we could have a little breakout here. I'll extend the top of this to where we'd have like sort of a false breakout here. This guy, let's move him up. And this is going to be the 1120 zone of weakness. So let's kind of go like this for this guy, and then that could happen, right? And then we'll move this guy up like that. So, this is sort of what I'm doing behind the scene. I'm not showing you guys my computer on the other side of the office that actually has the sort of secret sauce running on it and everything else. But anyway, this is kind of what I see over there. And so we'll go ahead and get rid of this. We'll go ahead and get rid of this. And then I'll come back and check with you guys. I'll check with you guys, later on when we're, I guess, somewhere in here or something later in the day. We'll see what things look like. Let's just be conservative. Let's do this. Let's do that for the time being here, and we'll assume that maybe we could come out of this bottoming formation into this period. So we'll sort of shoot for this high as our minimum target here for the time being. And then we'll use sort of this 5450 as the top of this, just for the time being, just as a placeholder. Now, if we outperform here this afternoon and then, pull back into this bottoming zone here, then I'll probably move the bottom up to here, top up to here, and we kind of go from there. So anyway, we'll broaden this out a little bit to contain these two zones of strength, even though these are far enough spaced apart to where I wouldn't consider this a constant zone of strength. It would be more like a zone of strength, pullback, zone of strength kind of a thing here for you guys. So anyway, having a little fun on Twitter here this morning, in case you didn't notice. That was just there's always a reason behind every single tweet I send. Believe it or not, you guys, I know I have a lot of feedback from even supporters saying, don't worry about these guys, leave these guys alone, Jim. Believe me, there are real specific reasons why I send out any tweet I send out. And so in the case of this, it's instead of answering 100 different questions about where I think cryptocurrencies are headed and Bitcoin in particular, I can, very easily just retweet this guy's snarky comment to me and hopefully prove a point to the younger audience, which is it just doesn't pay to be overconfident in financial markets. So if I'm right, Bitcoin will retest my 18,100 level this summer, maybe as early as the second, third week of July. I mean, you guys are. If you guys are viewing this AMC video, then you also have free access to the Bitcoin page, crypto page. So I'm not sharing anything shocking to you. But anyway, it gives me an opportunity to not only share with the public the sort of big picture forecast without giving them the same granularity that I give you guys as paying subscribers, but I can, put that 18,100 level out there. Hopefully, if someone's following and it prevents a huge decline in their face, I'll hear back from someone, hey, thanks, Jim, that helped me a lot. or, hey, thanks, Jim. Now I'm a subscriber to Bitcoin, which I hear all the time. And then I also wanted to point out that, I was as bullish as anyone out there when Bitcoin was flat on its back. When Mara was at 50 cents, that's a fact. I bought it at 50 cents and it went to $57. I don't own a full position. I didn't own a full position up to 57, and I don't own a full position now. I've told you guys I stagger my bets in and I stagger them out, my entries and my exits. I'm always in and out in up to 4 units, but even if I'm very, very confident in a move, I'll only go 50% in on my first order, and then I'll do another 25, 25, or I'll do the other 50. Sometimes I do 25, 25, 25, 25. And a lot of times I'll start to share some of that information with you as soon as my lawyer tells me what I'm allowed to say and not say. But just in a generic sense, the way I used to approach markets is if I was very confident in a move, I might do a 50% here, 50% here, or a 25% here, a 25% here type of a thing. If I wasn't as confident, I might do a 25%, 50%, 25%. I might do a 50-50. So, there's no exact science to this yet. I have someone who's about to come on board, a very talented big data person who's going to go back and look at all the different setups and then apply some AI and try to figure out sort of the last element of the missing piece of the puzzle here, for me at least, which is the trade discipline part of it. It's always been my Achilles heel all along. Either too large of a bet or too small of a bet at a certain point in time. And so that led me to the staggered in approach and staggered out approach. It's also an approach that's a very smart person that I met, a person who sold his company to B of A back in 2000. He headed up a huge market making firm. And I was able to talk to him for a year and a half and sort of trade side by side with him and exchange notes, almost like I'm talking to you right now. And we probably talk, between 2 and 15 times a day. And he had this saying, hey, Jim, I'm going to get started here. And I love that. And so that sort of reinforced my idea that if you are going all in on a bet and all out on a bet in one fell swoop, number one, you're putting yourself under a tremendous amount of pressure because you need to be exactly right. Or as it's going against you, you might even puke the position out and then blow it right at the exact time when you should have been actually adding to the position. So it does 2 things in my mind. It trains your brain to not think that you're such a genius that you're going to pick the exact perfect time to buy a stock, exact perfect time to sell a stock, all in, all out, okay? And probably more importantly, for those of you who don't even believe in psychology and training your brain and things like that, it will take pressure off of you. So if you're all in, think about the pressure you feel if a stock starts to move against you. And then think about the regret you feel when you completely sell out of a position and it continues to move in the favor of your direction of your original investment or trade bet, whatever you want to call it. So you literally release this pressure, relieve this pressure off of your brain of the all-in bet and all-out bet to where you'll wait and see. You'll stop second guessing yourself so much, and you'll have some bullets left over to actually exploit a move in your face. Let's say you were all in right here. What if you got spooked out of that position into this decline? If you were half in here and this happened, you would have been in a position to add to your position, a situation to add to your position. And especially if you know that the behavioral analysis model was looking for a zone of weakness, follow through weakness, and this zone of strength here. I mean, look at that. So the low of the day, 51.05. Here we are, 54.80. I mean, that's a nice little move. This was a nice little move. So anyway, I'm pretty sure that I'm allowed to talk in broad terms about strategy and trading ideas that the trading or investing approach that some real top-notch experts have taught me over the years, and I'm happy to share that with you, all of you, but especially the younger people before they developed really bad habits. I don't consider myself an expert. I don't really think there are too many things in life in general that I can pass along that would be some earth-shattering, great advice for young people. The thing I do think I can help all of you with big time is not repeating the stupid, stupid mistakes that I made when I was younger over and over and over again. And I've still made stupid mistakes, over the past 5 years, but I'm making fewer and fewer. And now we're finally to the point where all of this is going to be moved into code, and algorithms with, perfect discipline are going to execute the ideas that I've, figured out over 30 years. So anyway, take it for what it's worth, you guys. And as far as Twitter goes, I'm going to continue to pick and choose my spots to have a little fun, try to prove a few points here and there, and try to especially let the younger audience learn that humility, it pays to be humble in the markets. Otherwise, you're in for a really rough ride. And so that's sort of my message to this guy who, not only made the snarky comment, but he's so completely confident that Bitcoin will never move back down to that $18,100 level. The real shocking surprise to most people is going to be if my model is completely right and Bitcoin trades down to below or to about $3,500 over the next year or so. So, 18,100, to me, that's a fairly conservative number over the summer. And that's why I, bet the $5,000 donation to Wounded Warriors. I'm fairly confident the model is going to continue to track Bitcoin properly and that this guy's going to be wrong. Anyway, so here we are. We're at 922, and we have a little bit more into this zone of strength. It looks like the guess is approximately right as far as the price levels. A lot of noise here in this vibration area, and then we have this zone of weakness into 1120. I'll come back and talk to you guys again, either 1120, a little bit after, something like that. We'll leave this on the board for the time being. Remember, you guys, when you're moving into a trend channel, when you move out of a trend channel and back into a trend channel, that's when you get these fast market moves. So see this nice channel, throw out of the top. The second you move down into it, see how fast the market move is to the bottom of the channel. Same here. Trying to break out. Oops, wrong direction. Look how fast the move is to the bottom of the channel. So I don't draw a lot of parallel trend channels, which are really the rule for Elliott Wave. And throughout history, you'll see a lot of beautiful parallel trend channels. Lately, we're doing these expanding megaphones, and especially in this stock, because it's, a melt up, highly emotional stock. But again, you can see if we are going to collapse into this zone of weakness, you see how nicely all of this is starting to match up. So I don't have a strong opinion, but let's leave that on the board for the time being, and then I'll check back with you guys. Good luck.